The Fed is expected to cut rates for a third time this year with 88% probability of a 25 basis point reduction at the December FOMC meeting. One of the effects of falling interest rates is typically declining rates on credit cards, and that's because most cards use variable rates that track the Fed's benchmark rate. However, according to LendingTree, the average APR on a new retail credit card is 31%, with some as high as 34%. And the average APR overall is just around 24.5%. So, why are these store card APRs so high? Joining me now on set, we've got Matt Schulz, who is the LendingTree Chief Credit Analyst. Matt, let's start there. Why are the store card APRs so high right now?
Well, they're high because there's a lot of risk involved in it for the card issuers, and these stores want to be able to give these cards to anybody who walks up to the checkout counter. And when that's the case, you're basically taking on a bunch of risk, and whenever there's a bunch of risk, one of the things banks do is raise interest rates on the cards. So that's where we are.
It seems like once we hit January, there's going to be a bevy of announcements, or at least social media posts that come out from who is now the president-elect, and at that point we'll have what seems like Congress in his favor, and with the red sweep that we had seen, all these things considered, a credit card rate cap has really been talked about, and it seems like it's accelerating in thought process here. What's the likelihood of this becoming reality?
It's still a really, really long shot. Even though President-elect Trump supports it, even though people like Bernie Sanders and AOC and Josh Hawley in Missouri have all talked about rate caps in the past. So there's a bipartisan thing happening. But there are just so many people and so many moneyed interests who are going to do everything they can to keep that rate cap from coming. And it's a long shot at 18% or 20%. At 10%, like President Trump talked about, it's a non-starter, honestly.
Yeah. So all these things considered, the landscape right now, 3 in 10 Americans are somewhat likely to apply for a store card this year. What is the kind of delta that you've seen versus last year, and what is the outlook projection going into 2025?
Yeah, people are a little more likely to say this year that they'd apply for those store cards, and that's even, like you said, with the rates being 31% or higher. And some of that is just that people are looking for anything they can do to save and to extend their holiday budget, because those cards sometimes come with 15-20% discounts, and that's significant. They can be a good tool if you pay it off in time, but that's often not necessarily possible.
You know, would love some tips that you have for cardholders out there, especially in a peak shopping season here, as many people are trying to figure out how to smart spend, but also how to begin paying down some of the debt as well that they're taking on here.
Yeah, really one of the best things you can do with card debt, and really any type of debt, is get your interest rates under control. Yeah. And if you're waiting for the Fed to come in as the cavalry, you're going to be disappointed. But if you can get a 0% balance transfer credit card or a low interest personal loan, that can be really good. Something that people don't necessarily know about as well is that you can call your credit card issuer and ask for a lower rate. About 3 out of every 4 people who did that in the past year were successful, and the reduction can be really significant. So that's a really important step to take too.
Store cards versus buy now, pay later. What is the thought process around that?
Well, we found in our latest survey that store cards are still a little more popular than buy now, pay later, which is interesting because that kind of goes against what the trends have been for the last couple of years. And both of them can be great. They're just very different. With buy now, pay later, the difficulty is that they are so easy to get that you can get too many of them and get a little bit out of control. So that's certainly something to watch.
Matt Schulz, thanks so much for taking the time here with us on set. Appreciate it.
Thank you.